I think that what's happening to commodities, and I think also what's happening to world trade so far this year, it doesn't so much flash a red light, but it just gives you some question marks about the strength of the global economy. And I think particularly when you look at commodities, you know, it was an oil story last year. It was primarily an oil story. The other commodities didn't really join in. But so far in the last few months, you have seen all of these other routes in other commodities.
Copper's an interesting one because even at these prices, miners will still be making money. So there's a little incentive for them to reduce production. I mean, we might start to see them trim capex spending a little bit. But I think that, you know, they'll keep mining. Longer term, compared with other commodities, there are reasons to be quite optimistic about copper. I mean, I think people feel that the world is slowly running out of copper, so we'll see.
Well, on the demand side, it looks fairly weak. Chinese data has been weak, and also Obama's announcement yesterday will not help, and also European demand is weak. So, and then, of course, you have Iran and maybe Libya coming back online. So it looks pretty weak. And should it go up, it would only be from geopolitical things like a pipeline in Kurdistan exploding or the Yemen crisis flaring up again.
I think that will depend a lot on what happens in China, about how the story of the slowdown develops. You know, will we see data that shows a real slowdown in the real economy beyond the stock market? If you start to see that, I think the bearish mood could continue.
In general, in China, they had a leverage-induced spurt of growth, and now that's fading away, and they're using all kinds of tricks like get the stock market going so the consumers on the street or the individuals on the street will be happy because they're earning from something. They no longer have the wage growth they had and the kind of income they had. So I think they're looking at various different tricks, but it's a game that's only going to work as powerfully in the short run versus the long run. And I think our head of FX basically said if the Chinese government stopped manipulating the economy, because we don't really know what GDP growth is, you'd probably get something closer to 4 to 5%, and the rest of the world has to know how to live with 4 to 5% GDP growth.